Okay, so we're going to do a quick video on how we're analyzing and looking for a setup and how we're marking it all up to try and find an opportunity. So let's go with it. So we start top down, which will be from the weekly down to the daily, and then we'll look for our 4-hour entries. So this is NZ, this is the 25th of March. So NZ, so you look at the market structure first. The market structure in the overall picture, we've got a very long-term frame. Obviously, we've got bullish structure. However, we haven't been bullish; it's been all over the place. We've got a zigzag type of expanding flat pattern potential here with a long opportunity. This is a very big opportunity actually coming up on NZ. So what we have here, so market structure overall in a larger time frame is bullish because it's broken structure here. However, and then it's got a broken structure there again, but it's broken to the downside. Now, in saying that, in terms of order flow, so this was the last bullish candle before the new breaker structure down, right? Now, this one here has actually been broken, so we've got a potential bullish chock here. So that's in terms of order flow, right? So that's a bullish chock that's been broken or created, so to speak, because the last order block, which we were looking for shorts, has now been invalidated, and now that's turned to a breaker block. Okay, so the order flow shifted. Now, overall, on a bigger time frame, this New Zealand, based on the waves pattern, this is an expanding flat, right? So it's broken at top, broken at bottom. The next target on the expanding flat is new highs. Okay, so should this go, should we get an entry, this is potentially a big trade. Now, if I drop down to, now we know order flow on the weekly is currently flip bullish, so let's make a note. Weekly order flow flipped bullish. Now breaker bullish chock. So my breaker block, if you want to call it, is also I classified as a chock. Okay. Now we drop down to the daily, and there's our weekly chock, which we want to mark that one. That's our weekly chock. Right. Now on the daily, we want to look at the order flow on the daily. So we mark up the last high and the last order block that was created from it. So usually it's going to be this one here, right? So the last, well, it's not quite an obvious one, but usually that's what's going to happen. So that's it there. Now we've got another one here, which is it's a bit weird because it's a bullish candle, but it's the last one before the break. So I'm going to mark the body to the low, right? We can see the overlap here as well, the two candles overlapping, sorry, the two order flows overlapping, which is a very good area. Okay, now this is from a daily perspective. In terms of market structure, we've got a chock, breaker structure, and a higher high. Okay, so this is an amazing opportunity here. Yeah, this is a big opportunity on this one here. So that's the daily order flow. Then we shift down to what we want to do, look at the order flow, look at potential entries on our 4-hour time frame, and the order flow on the 4-hour time frame. Okay, so these are your daily order flow. daily order flow. Okay. Now in terms of the 4 hours, so this was the last high that got broken. We want to look at the in less than 50%, which would be this would have been one of them, 4 hours, but nothing's happened. And then your second one is here on the 4 hour. Okay, so that's a 4 hour 4H order block, POI. And we've got a second one right here. Okay, so now that it's tapping into here, what we want to, you can either take an aggressive approach, assuming your stop's under here, and that it's not gonna tap that. But even if it does tap that, it's still valid, because it's still part of the order flow. I know structurally it might appear, and I wouldn't be surprised if it does do that, because they do tend to manipulate situations. But sometimes they don't. It doesn't. It just goes. So you have to be aware. You can take a risk approach and just take it, knowingly that if it does take that out, it'll give you another setup if it's going to go north again anyway. So you might just take that approach to it as well, which is a bit more aggressive. But it does work too. So then you've got, so what we're looking at from here, so we've got tapped into the 4 hour order block. So that's still valid. Now we've got a bullish type of candle close. What we want to see on Monday is this drop down, take out these lows, tap into this 4 hour order block. Break up, give us a chock, break out this bearish order flow on the 4 hour shift to shift it, and then pull back in, and then we go hell for leather. And this here, typically on this one here, this has got a massive potential. So this here has actually got a minimum to here. That's even if you just took a risk entry, that's a 13R, that one there. That's just blindfolded, so to speak. That would be one, and if that does not happen, well then we'll take that next one here with even shorter stop loss with the same target, which will probably be 20 odd R. So that's the trade for next week, and that's the strategy in a nutshell, how it works. From the higher time frame to the lower time frame, and what we're looking for. So this here is a prime setup. It's pretty clean. So in a way, it done a lot of damage for me last week, but in a way, it's also formed a nice little setup. So it could give a very nice big opportunity for come through to next week. All right, good luck with that. I hope that helps.